For more reaction to the Fed minutes, let's bring in Stanley, Chief U.S. Economist at Santander. Mr. Stanley, welcome. Good to have you with us. I'm going to call you Mr. Stanley because we've still got Steve Leisman. I don't want there to be any confusion. What's your reaction to what they said?
So it sounds like what we heard from Chairman Powell a few weeks ago, not surprisingly. I mean, since the June meeting, from June to July, the growth data was stronger and the inflation data was softer, and it kind of offset. And I think that left them more or less where they had been in June, which was most people were thinking they were going to have to go a couple more times. So that would be one more past July.
One more past July. Do you expect that to be September or not?
I actually think they'll skip the September meeting. I think they're on an every other meeting tempo. So they skipped in June, went in July. I think they'll skip September and then take another look at it.
And is November the last for a while?
I think it is.
Wait and watch and...
It depends on the data, of course, but I think it will be, yeah.
And what about the point that Steve made talking about disinflation and housing to relax those hikes? I mean, that has been a key sticking point.
Yeah, well, we've gotten some better data on inflation, and what I think we're waiting to see is if that has staying power. Is inflation going to continue to decelerate, or is it going to stay hot? I mean, the Fed models would say that if the labor market is as hot as it's been, inflation is probably going to stay pretty high, and so. We've gotten good news, but it's not clear whether it's going to persist.
So in this environment, how long would you have to see a trend of less hot inflation, if not deflation, to sort of feel like, okay, we're on more solid footing here?
Yeah, so we have 2 months of good CPI numbers. I think if you get, 3 or 4, then you're starting to get to a point where you can say, okay, at a minimum, we can be very patient. Maybe we don't have to go, or we can just pause for a while and see what happens. But there's always the risk. Inflation may come down for a while and then reaccelerate, right? So you're always kind of hostage to the data.
How do you handicap recession risk, if at all?
I don't think we're going to see a recession in the near term. I think the consumer is still very strong, which we saw yesterday with the retail sales numbers. Looks like third quarter GDP could be very robust. But I think 2024, there's a little bit more of a risk. I think we'll probably muddle through, but if we're going to get a recession, it's probably going to be next year.
That will be interesting in a political year, very much so, because it's very hard for an incumbent to run against a slowing economy.
Sure.
Right? Yeah.
Yeah, I mean, we're not thinking too much about that just yet, but that's going to be a big deal in 6 or 9 months.
Steve Leisman, I know you're still with us, and Stephen here makes a good point about retail sales and a potential for re-acceleration. When I saw how strong those numbers were, that was sort of my first fear. I mean, the consumer doesn't really appear to be, at least in the broad sense, really slowing down in spending. Is that a potential risk for inflation trends to move back higher, go the opposite way that the Fed is intending?
It definitely is. And first of all, I just want to point out for Tyler that Stephen spells Stephen with a PH, so there's really no confusion at all when you say it. I can hear the difference when the way you say it. So just to be clear about that, these minutes, I think, would be a problem if we didn't have Jackson Hole next week, because I would be thoroughly confused with very little chance of getting unconfused. But next week, we're going to have a bunch of interviews with Fed officials. The Fed chairman is going to talk. And here's where we're at. I want to just remind you of two of the headlines. One is that most still saw significant upside risk to inflation that could require further tightening. I don't know if that's still the case, because since then we've had another inflation report. And then there's this idea about the requirement that we have below trend growth to bring supply and demand into inflation. We are moving the other way. That's very significant to me, and I don't know how Fed officials are processing that. It's going to be very important to listen to them, given Courtney's question of retail being so much higher. You've got this crazy GDP number coming out of the Atlanta Fed of 5.8%, following an upside surprise in the second quarter of 2.4%. So there are really important questions on the table here as to whether or not the Federal Reserve, amid what it's saying here of lower inflation, some cooling in the job market, feels it needs to lean more heavily against the economic momentum that's out there than we believe. I think Stevens, with a PH, is 100% right that September is not on the table, but November could be on the table. And who knows about even more, depending upon how much they think they need to press on this economy to get it back down towards below potential, not where it is right now, which is well above potential.
Which is well above. All right, gentlemen, thank you very much. Steve with a VE, Leisman, and Stephen, PH, Stanley, thank you very much.